Hey, good morning, everybody. Thank you for joining me this Monday morning. We'll get to that really quickly. Let's understand why I am here. I am here to help you process, understand the market, and improve on your own trading. So, if you stick with me through this entire video, through this pre market live stream in most cases, you're going to pick up a tool or a trick or a secret that's going to help improve your efficiency in trading. Now let's go over it. Let's talk about trading for the last 3 months. The most successful tradings, not this guy right here, but the most successful people over the last 3 months have been people that have been buying the dip, whether it's intraday dips or a weekly dip. It's going to be on larger tech, Nvidia, Google, Netflix, even Tesla buying the dip intraday or weekly. So understand they're going to continue with that strategy until it no longer works. So I'm talking about some people that I follow on Twitter. Last week, Monday, they were red. They couldn't understand why they were red. Tuesday, Wednesday, Thursday, Friday, green because they were buying the dip. Understand it's not going to be like that forever. And if you stick with me through this video, I'm going to tell you what I expect in the market. Let's remember when the market was 435 on the SPY, I mentioned we were going back to 442, maybe even a little higher before we see a drawback. So I'm going to share with you how I process the market each day pre-market to help me trade an effective market day. So let's just go with Friday. Friday, we closed out the market day 443 and a quarter on the SPY is where we closed. Understanding the volume on the SPY on Friday was like 104 million, which is a pretty solid volume day. There was inflow for the fourth straight day. So understand the market's curling up, but nothing goes straight up. So let me tell you what I'm expecting. First off, remember today is not a holiday because tomorrow is July 4th, but it's a half day of trading. So you've got trading till 1 p.m. With trading till 1 p.m., there really should be an influx of trading right around 12:30 and an influx of trading this morning. So definitely watch how the market opens this morning at 9:30 a.m. If it spikes up and then pulls back, expect it to spike towards the end of the day. If we see a little nudge going into open and then it drops, we get a quick rebound, expect it to drop later today. That's one of the secrets or tips that I'm going to hopefully help you trade the market today. Now, I'm telling you, don't chase in either direction. Let things play out. Understand the most volume comes within the first 10 minutes of trading and the last 10 minutes of trading. Understand that about 50% of trading activity happens off market or in the dark pool. So, with that said, the most successful traders are the ones buying the dip. That's not always going to be the case, but until it stops working, that's what I'm going to continue to do. I've been doing that for 2 weeks straight. Next, second lesson before we get into the SPY and what I'm expecting today will be just to journal everything. I'm going to open up another account in a couple of days. I haven't worked on it. Why? Because my plan for Monday is I don't plan on trading today. I expect extremely light volume. I know Tuesday is a holiday. That leaves us 3 remaining days in the week. If you're wrong on your option position on Monday and it opens on Wednesday in the wrong direction, you're going to be down 50%, 60%, 70%. You're going to stress over the 4th of July weekend. So it's important. Please spend time over the 4th of July holiday. Enjoy your friends, enjoy your family. Now, why do I say this? Because the past couple of days, I've enjoyed my family so much that I realized I overly stress about trading. So, another lesson for me, I suffer from FOMO. Now, here's the catch. If I'm not in any positions, right? I have FOMO in the morning. I'm like, oh, I want to get into, and I always journal it out. So I have some bullish plays and I have some bearish plays. Now, here's the thing. As soon as I get into them, I'm already thinking, okay, what do I want to get out of that option? And as soon as I turn green, I'm like, okay, I'm green 18%. Okay, 32% is enough. Whereas I don't usually follow enough of my strategy to hold looking for a certain amount on the SPY, thinking my stock or my underlying option is going to go up 130%. I can give examples last week. Remember, I spoke about Lucid for 2 straight days that I was in the $6 calls. I was in at $28. I was in at $25, $15. It went down to 11. That option went north of $1 by the end of the week. Me, I exited out somewhere around 28 with a profit of like 40 something percent. But the profit should have been 250%. Again, The reason I was supporting Lucid is because I know the Saudi fund owns about 15% of the stocks, and there are other Saudi and people from the Middle East and the Dubai and United Arab Emirates that are going to be buying into this company because it's probably fully supported in Dubai and in the Middle East. So I'm thinking, okay, they've got a ton of money. Let's remember, Liv just bought like the PGA, or at least they're merging, but that's what I expected. So if I let my strategy play out, I left 250% on the board. The same is true for Mara. I was expecting a Bitcoin run. We were in the Mara $12 calls. I was in at $52 on average. Those went north of $2.20, a return of what, 320%? How much did I make on Mara? About 38%. So again, when I get into a trade, I get so eager and anxious. I'm sharing this because you probably suffer through the same thing. I suffer through anxiety. Now, it doesn't mean all of my trades are good. On bad trades, okay? I suffer from anxiety as well. I know sometimes the market's going to come down. Let's just give the SPY, for example, if it was 443 and I say we're going to hit 440 at some point during the day on Monday, and I'm holding calls. If I think the market's going down 3 points or 0.75% at some point during the day and I'm in calls, then my calls are going to be worth less. So I struggle with that. Sometimes when I'm in a bad trade and I'm down 18% or 9% or 11%, I can take the loss, take a slim loss. A lot of you use a stop loss, and more power to you. I happen to not use a stop loss a lot of times unless I'm using a trailing stop loss. I'm in the profit. But here's my problem. So then all of a sudden I'm like, I should have sold. Then it's down 30%. And I'm like, okay, screw it. I'm going to sell when I get back to minus 15%. And from there, all of a sudden it's down 45%. And I'm like, okay, shit, 20% out would have been so much better. So again, just a reminder, I suffer from like anxiety when I enter into a trade. I instead of underbidding, which I should do sometimes, I pay the ask or I'll pay the bid, and then all of a sudden I'll get that drop 5 or 10%, and I'm like, I could have underbid by 10%, and my entry could have been 10% better. So when people say, "Oh, entry is not that important," I know the market's going higher from where we are. Understand, you're not calling the bottom. If you're buying $1 worth of a contract or $100, whether it's SPY, SPX, Google, Amazon, who really cares? You could probably buy that same contract for $92, secure an 8% discount. Why? Because we're never so accurate calling the bottom. When I'm looking for the top of the spine, I'm looking for puts. Of course, it always spikes up higher, and I'm like, shit, I'm off 14%. I could have got in that much better. So again, my anxiety, as soon as I buy something, I'm thinking to myself, I want to sell it. Whereas what I should be thinking is, let's hold it through my strategy. My strategy is Lucid's going to $7. My strategy is Mara is going to $14. My strategy was Carnival's going to be bought up on any dips. On any dips, I should be buying calls and going out to the third week in July. Remember, we have someone of our members on Discord who has those Leap Carnivals that are up 800%. They dropped, used a trailing stop loss, probably exited out, but I'd be looking to repurchase on dips. Now, with that said, I do expect the SPY to fall, not the sky to fall, but the SPY to fall. So when is it going to happen, Matt? Monday, Wednesday, Thursday, Friday? I'm not even promising it happens this week, but I'm going to tell you the scenario that you're looking for when you actually expect the market to go down. It's going to start out like any other day. The market's going to go up 2.25 points. And then unlike other days, you're going to see the market lose support. Generally, we see the market, okay, come down. Let's say we open at like 444 and it comes down to 443. We find the same support that we closed out on Friday, and then it goes higher. And then we find more support, and then it goes higher. It's like steps higher, steps of support. That's a bullish trend. However, on the day that we go down, and again, I'm not promising it's coming up this week or in 2 weeks, but I do think it's coming up soon, and I think we're going to go down about 3%, maybe a little more in one day, and I'm not sure what triggers it, but you're going to see the market start up higher, 1.5 points, 2 points, something like that. Then all of a sudden it's going to give way those 2.5 points, and it'll be back to flat. Those are days where my alarm's going off. Okay, on the next spike, I'm going to take a chance, enter into a position. I'm going to go maybe $1 or $2 less on the SPY. That way, if we get that $6 drop, boom, I'm going to be making that 500-600% return. Again, when we enter into contracts, at least when I do, I enter in slowly. I posted this last week. Enter into a position. I'll buy 2 contracts, 2 more. So I'm in at 72. Oh, now I'm in at 68, 65, 64, 2 more. It's back to 68, 2 more. When I look at my average cost on entry, I'm going to be right around 66, 65. If I entered all at once at 72, I'd be 72, even at 70. So my average would be 71 versus 65. That's a $6 change. That's about 10%. Okay. So entry point is most important. Okay. With that said, what am I expecting? Monday, low volume day, probably somewhere in the range of 34 million. The market closes at 1 p.m. Let's just give you, for example, again, as I shoot this at 10 p.m. or 10:06, let's see where futures are at right now. So I can just give you my most accurate summary or my most accurate prediction. Let's look at futures at 10:09 p.m. The NASDAQ, of course, turned positive 0.06%. And the S&P is down 0.03 and the Dow is down 0.04. So again, let's remember the SPY has been strong lately. Before we do that, let's go over to Discord. Okay, what do I like to look at? Net flow for the market. So I'm just going to pull that up. We'll pull it alongside. So if we go to Discord first, NASDAQ sets for its best first half finish in 40 years. In 40 freaking years. I got to like this post. Okay, let's go over and head over to Discord. Here we go. Bum, bum, bum. Golden sweeps. Now we'll skip the golden sweeps. We'll go right to the flow and algos. Let's look at what I like to look for is the top flow. So the first thing I'll look for is the top flow. That'll tell me where the most activity is right now. So here's the top flow that I can share. Microsoft. So I say to myself, okay, if the Qs are bullish today, if all that is bullish, I'm going to look somewhere at Microsoft. AMD is up there, okay? We got a Meta, Netflix, Newmont Mining, Royal Caribbean. Again, that ties in with like a Carnival, the cruise ships, return to society plays. What do we see on the other side? The Qs, Apple, okay, NVIDIA. So again, the Qs aren't telling me they're going to rip higher. Something else I want to look at. I want to look at the Russell, the IWM. Why? It's a little put heavy here. But again, if the Russell has a strong day or at least a strong morning, then I know small caps are going up. If small caps are going up, it's likely big tech is going up as well. So let's look at the net flow for the market. So we'll go net flow for the market and let's go out 5 days. So we get not how just Friday closed, but really how last week was. And again, you're going to see a bullish trend. I'm going to do the same thing. I'm going to look at the net flow for the SPY as well, and we'll go out 5 days, and hopefully that'll work for us. In the meantime, I'm going to talk about a couple other things while we're waiting on that to pull up. Let's just see if that pulls up. Not pulling up yet. Okay, so we'll give that a chance to kick in. If it kicks in, great. If it doesn't, it doesn't. But I always have a couple of things I want to talk about. So Friday, again, from the bottom on Friday, 441, top 444.30, a spread of about 3 points. Now let's remember the last 5 Mondays, and this is again, you listen to me speak for 20 minutes pre-market. I tell you what I know. I share patterns with you. The last 5 Mondays, we've seen a 3 point, 3.25, and 3.5 point range. Okay, so how does that help you? I haven't told you if it's bullish or bearish. Well, I can tell you right now, let's just say we open at 444. We always open a little green, something like that. So 444. Let's say we reject 445. So you see 445.28, the top on the SPY. Easy. You go down 3.25 points and you say if 445.28 is the top, then 442 is the bottom. How do I use that information? Well, if the market starts out strong and then we fade the day, so we see the high rejects 445.28 2 or 3 times, what would I likely do? I could likely go out to Wednesday, Thursday, or Friday and buy some puts. Remember, I'm looking to get in and out of a trade. I like to make anywhere from 35 to 40 to 50%, depending on the trade. Again, have a full strategy, so know exactly what you're looking for. If you're in at 445.28 and you call the exact top, and I say the bottom's going to be 3.25 points from that, then you're definitely looking for 442 to get out. So if the market drops and you're at 445.28 and it goes down to 444, you shouldn't get out and secure profit. See, that's my problem. I've been getting out going, okay, I've been right, saw a quick drop. And then what happens is it spikes up and then it drops further. And I'm like, shit, I should have been holding. And the same is true whether it's a Netflix, a Google, an Amazon, whatever you're seeing. If you're seeing outflow for the day, it's okay to hold puts. If you're seeing inflow, it's of course okay to hold calls. So again, let's just go back and see if that pulled up. I'm pretty sure it probably did by here. Okay, here's the net flow. Again, so I went back 5 days. So what are we seeing here? Net flow for the market. We could see towards the end of last week, again, we saw everything spike up here, come strong. The volume is pretty good. Momentum is pretty good. After the momentum, we're just seeing we might have some type of pullback. Again, a pullback since we skipped up from 436 all the way to 442. You're talking about 2%. So when I say there's going to be a pullback, I would look for a pullback right around 440. Again, we ended extremely bullish. You could see that with the price. You could see that with the net premiums going up. Still spiking at the very end of the day. Even though puts are going up, the premiums, we haven't seen that spike. And when we see a spike in puts, what you'll probably see is the price finally drop. But let's look at the SPY, because the SPY tells another story. The SPY has always been lighter volume, a little bullish. Again, the call volume dropped here. What happened? The market ripped higher. So these charts aren't always correct, because as the call was dropping, you're expecting the market to drop. The put premiums are up pretty high. They're up past zero. Net premiums are down here between 70 and 80 million, and yet the market spiked higher. So again, another reason I'm looking for a pullback. It doesn't mean it's happening Monday. Doesn't mean it's happening Tuesday. But again, what I know about Monday is I know that we're going to trade a 3.25 point range. So let's just reverse the situation. Let's say we find a bottom and we dip in the morning. We find support at 442, and the market won't go under 442. 442, then it bounces to 443, comes back to 442, won't go under, goes back to 443. I tell myself, okay, 442 is the low end. If we go 3.25 points higher, and when the low end is 442, that means we're going to 445.25 on the high end. So I can get involved with calls. I don't know if it's a Microsoft, an Apple, just a SPY call. We can do an SPX. There are so many different options. But again, I'm coming up with strategy. I'm playing the patterns, knowing the last 5 Mondays have been 3 points. Okay, so what else did I look at over the weekend? I looked at this beautiful picture. Hopefully you guys can see that. That's what my evening looked like tonight. Okay, that just happened. So again, Friday, we were up 5 points, over 1%, a 3-point range, 105 million on the pop. Okay, Tesla over the weekend, interesting, because if the market is bullish and the Qs are bullish, Tesla can see like a 3 to 5% gain. Why? Because their production and their delivery numbers kicked ass over the weekend. I think the estimates were at 447 or 448,000, and they came in close to 480,000, which again is like a 5% beat. So markets tend to move somewhat in line. So of course, nothing happens right at 5%. That's why I'm saying maybe 3 to 6% on the high side, maybe 6%. All right. With that said, what else did I see going on? JP Morgan, Chase, Citibank, Wells Fargo, Goldman Sachs, Morgan Stanley all raised their dividend payout after passing the Fed's stress test last week. Now, here's the interesting thing. You did not hear me say Bank of America. I mentioned last week, and you probably heard it over the weekend, Bank of America is currently riding $100 billion of paper losses on bonds. Meaning, if they were to sell their bond portfolio, and does that sound familiar? Because it happened to First Republic and it happened to Silicon Valley Bank. Remember, they had to sell their bond portfolio at a $2 billion loss. $2 billion loss, right? Right now, Bank of America is holding $100 billion paper loss. And I mentioned this on Friday, and what happened? It went up like 0.5%, and after hours, it was up 0.8%. So I just read what I read. It just surprised me that it's going up. CBOA discloses Bitcoin ETF plans in a filing with the SEC. The SEC did turn down a lot of the other plans. This is interesting. JP Morgan collar trade went up on Friday for the third quarter. So here's what they're doing. They're shorting the 4670 calls. Okay, so they're saying the market is going to be under 4670. So we'll say 467 on the SPY. Okay, the SPY sitting at 443. So they're saying the market has a top of 5% higher. They're long the 4215, the 4215 puts. So they're saying the market is likely to be under 420, 421. Then they're short the 3560. So they're looking for the market to go under 420 and above 356. And again, they're selling the 467, saying the market's not going to go 5% higher. We're kind of at the peak. So that's their third quarter collar. Understand their second quarter collar and first quarter collar were pretty damn money-making machines, okay? When they came out, I'm like, no way does the market rip, and the market just ripped, and they had it. I mean, they nailed it. Okay, then I have a lot of traffic. June, let's talk about June. The Dow had a 4.5% biggest monthly gain. The S&P, 6.4% biggest monthly gain since October 22nd, October of 2022. Dow, since November of 2022. NASDAQ, 6.5% gain. The Russell gained 8% last month. That is absolutely insane. The 444 number, again, I mentioned that. Oh, here was a lesson I gave to Discord on Friday. Somebody said to me, hey, man, Matt, if we pass that 443 number, how much further north can we make it? Because, again, I was talking, Friday morning that we would see 444 on the SPY top side. I think we topped that just a little, right? And then we pulled back to 443.28. The person was asking me what they should do. Now, here's what I told them. I'm not their father, so I don't control your trading accounts, But again, if you're not sure or have a complete strategy, why make the trade? So much easier sitting on the sideline. So as we sit Sunday night, and again, a lot of people get anxious for Monday, and I get anxiety when I trade. I'm not going to lie about that, but I'm not worried about tomorrow. I'm not planning on trading on Monday unless I see an A plus trade, and an A plus trade has to hit me in the head, and I go, holy shit, I can't believe that dipped. I'm going to buy that dip, or I can't believe that ripped 10% higher. It should probably only be up 2 or 3% today. So I'll get in the top of something and let it fade and come down. So again, I watch for movement like that. I watch for volume that doesn't necessarily make sense. But I told the individual, it's always risk versus reward. So if you're getting it at 443 and you were expecting more upside, what do you think? Do you think the market was going to rip to 446 or 47? If you did, it's great to get in. But we didn't. We thought 444 would be the top. So you're talking about you have 60 or 80 cents to the upside, whereas the market easily could have dropped to 442, and all of a sudden you're in the red and you're playing 0 days till expiration, 0 days till expiration. Yeah. Anyway, these are the lucid calls over $1.10. Again, if you follow me, you know we got into these at 25 and then it dropped down to $11, $12 week. They did the same thing to SoFi last week. Remember, I got in SoFi 2 weeks ago. So it was a Friday before last, and they came out with a downgrade to $5. And I'm like, that's bullshit. The chart looks strong. The volume is there. And for that Friday, it dipped, and then it went straight up since then. So again, sometimes analysts, they do tricky shit, and then most of their stuff is to take your money. The Supreme Court blocks Biden's plan to cancel the $430 billion in student debt. Okay, Biden is saying he has another idea how to cancel that and how it'll pass. Or, I don't believe him, but I won't be playing SoFi anymore. To me, that's too volatile, too dangerous right now. There's some other stocks that I spoke about. I spoke about an Apple call on Friday. The 192.50s. You could have exited Thursday and paid $5 a contract. Again, $5 a contract. The 192.50s. Understand, those went up to $55, even probably higher, probably to $1. So you're talking about a 20-time return. So those people that say, I can't afford it, I can't afford trade options, $5. So let's say I bought 20 contracts. I paid $100. That was the ask, the $5. The $4 was the bid. $5, right? Say I bought, 100 contracts. Let's say just 100 because it's easier that way. Cost me $500. Extremely risky. Bad side, I lose the 500. Maybe I get $2 out of it, so I would lose $300. The positive side, those went up 19x to under $1. 19x. So I'm putting in 500. That 500 would be worth 9,500. 19x, 9,500, 500. $100 would be worth what? Just under $2,000. So again, Lotto doesn't mean do stupid things. Lotto means if the cues are strong as we're headed out of Thursday and into Friday, you say, just in case there's a gap up on Friday morning, I'll try Apple or I'll try Netflix going up 10, 12, 15 points. Probably not going to happen. But if it happens, that's how you get the 20x return. You don't have to wait. Or the same thing if the market was going down on Friday, which it was, and then it finished higher, right? We saw that quick V recovery. That's where you're getting the cheap options. When you're saying I'm making a bullish play because they're buying the dip, that's where you get involved. A lotto doesn't mean, hey, man, this option's $5. I'm just going to spend $500. I don't know. If I get lucky, I get lucky. That's not how we play. You have a strategy. So if the market is strong, you're saying gap up. You're saying movement up. Talking about the Bitcoin filings, the SEC said the spot Bitcoin filings are inadequate, and that's talking about Fidelity. That's talking about BlackRock. So they have to update their filings and refile, and that's probably Deutsche Bank. I mean, there were like 4 or 5 filings. I mentioned window dressing on Friday. So this is interesting. If you want to look at whatever stocks, and again, not taking questions today because instead of a live stream, I'm shooting a pre-market video. If you like this, thumbs up. Join me on Wednesday morning, 8:30 a.m. Follow me to Discord. I'm here to try and help you. If you find me on Webull, Twitter, moomoo, again, ask me a question. I'm here to help. But I spoke about window dressing. So window dressing is basically manipulation. The second quarter ended on Friday, June 30th. Hedge funds, banks, mutual funds, holding companies, they have to release their holdings. So they want their books to look good, meaning I want NVIDIA to be on my books, Apple to be on my books. I want solid companies. If I'm holding a piece of shit companies, trust me, it got sold off on Friday. So basically, you could look at any of your companies. If you see positive info on Friday, a spike in volume like we saw in the SPY on Friday, then you can say, I can continue to buy the dips on those stocks. And let's look at a couple stocks real quick, and I'll see if I see anything that kind of makes sense. I'm just going to look at Nike real quick. No, Nike doesn't look anything special to me. In fact, there was a great volume and there was a mass exodus on Friday. So again, I might look for Nike to drop another 5 or 10%. Looking at Hood, they were selling that. Carvana, very low volume, so I wouldn't even be looking at that one, positive or negative, although we've seen that one move. Carnival. See, here's what I'm talking about. Everybody on Friday wanted Carnival the last couple of days on their books. Carnival sold off with earnings, and then where did it end? Higher. So you're talking about back there, what? Not even a month ago, you're talking about Carnival was $11 a share, and then they got the double upgrade around June 12th. And from there, it was $13 a share. Now we're $18.83. I mentioned $17 or $18 below before. If you look at the 5-day pullback, we pulled back 5 days ago. It was $13.80 after earnings. $13.80. It went up $5. It went up 37% in the week. So understand, is Carnival done? Are they just buying Carnival to let it drop like shit? No. Good, solid volume tells me any pullback in Carnival is a good buy the dip stock. Same is true with airlines. I've been speaking about airlines for 3 weeks straight. And airlines are up 17, 18%. So again, I'm just looking when it comes to Bitcoin stocks, Marathon Digital, Riot, or Coin. If you're expecting me to say buy, because I said Bitcoin can go up to 33, 34,000, understand if the market has a pullback, the market pulls back to 440, 435, 430, even 420, which would be massive, right? We're at 443. We pull back to 420. You're talking about 24 points. You're talking about 6%. Understand, Bitcoin will drop back to the 28,000, 27,900, 28,100. If it does, that'll be great entries for stocks like Mara, Riot, Coinbase. I still don't like Coinbase. Again, they're being sued by the SEC. I'm sure they're countersuing. Not my thing, okay? So again, Mara's on my window. Disney's on my window. Why? Because here's your Disney chart. And again, I'm always early, but Disney, 2, 4, 6 out of the last 7 days purchasing. So as long as the market doesn't drop substantially, Disney's going to continue to get bought up. Where would be my exit on Disney? Just under $94. So we're at $88, $94, $6 move. Give yourself enough time to be correct. Go out 3 weeks to July, 21st. That's an option play that I'd be looking at. Again, not looking to trade Monday. We'll be on Discord. We'll be helping you with the market. Want to see how it plays out. Again, I'm assuming light volume, 3-point range. If we see 445 on the top, we'll see 442 on the bottom. Heading Discord. See you guys at 9 a.m. Have a great week. Remember, enjoy your family. Enjoy your 4th of July. And I'll be back Wednesday morning, 8:30 a.m.